Happy Friday. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets. Sadly, no Steve Strazza today. Strazza is moving. Didn't know that was allowed, but he is. You can live wherever you want these days, so he's moving. He'll be back on Monday. Regardless, though, the show must go on. We have Louis Sykes stopping by because today is Crypto Friday. We'll have Larry Thompson stop by as well. And that'll be the show. Kenny Glick will be here as always. What up, chat? Having a good start to your day, I hope. All right, good. Yes, it is a bull market, big man. Absolutely right. Let's get the show on the road. If you'd be so kind, if you're watching us on YouTube, hit the thumbs up. I would appreciate that. So would JC. So would Steve, even though he's not here. And where's my intro? Here we go.
All right, we're back. It's a bull market, Spencer. I don't know if you heard.
I've been hearing such things. Have we reached an all-time closing high? Yes, we have. And
for the NASDAQ, for the
NASDAQ.
S&P 500, Dow's still a little bit of ways.
Yep. Cool. Looking good out there.
You know, historically, you know, what's really interesting about humans is that humans make really, really poor choices. Like just humans are just not good at making decisions when stress levels are elevated. I mean, it's just what it is. We make irrational choices. And humans, for some reason, I have no idea why, we have the data, humans seem to believe that whenever the market is making a new high, it's a good time to be selling. They think it's too expensive. I don't know what lies they tell themselves, but we have the data. It's all free and public, and anybody can see it. And we know for a fact that if you're buying something at all-time highs, you're going to get actually way better returns than at any other point.
Well, the odds are in your favor that you'll get
very much.
Returns, but you can understand how it seems counterintuitive. If you are buying at the most expensive price of all time, right, then you can understand why you would think, oh, well, I mean, it's never been this high before. I could probably get it for cheaper if I just wait. That is typically, I think, how most people think it is, how I used to think as well before I had my eyes opened up. But I can understand that for sure. I can understand like the thought process there.
I can't fathom how this is free public data. Everybody knows. That's like being like, well, the sun should be rising in the west and setting in the east, but it's fucking not. It's not like that. You might think it's more logical to rise in the west and set in the east, right? That would be more logical, maybe. I don't know anything about science, but it's just not like that.
The stat that really blew my mind when I learned it years ago was that it's like the S&P is like within 5% of an all-time high, like most of the time, like the vast majority of the time, the S&P 500 is close to an all-time high. So, you know, drawdowns are rare, right? Relatively speaking. And if you're not buying at all-time highs, it means you're not buying most of the time, right? So they're great. And as JC always says, markets trend. So all-time highs are not a reason to panic. It's the stock market is not like gravity. Well, it is in a sense. It will go down, but then it'll go back up again, right? So I guess that would make it not like gravity. So yeah, not like gravity. What goes up does not have to come down, actually.
This is not gravity. This is financial markets, ladies and gentlemen.
Yeah. But I do think that right there is like one of the core misunderstandings of markets that the average Joe has, is that all-time highs are bubblicious, right? That they're somehow bad. I think that is probably what most people think.
Good.
And Well, there's that.
Good, right? That's a good thing, right? We should not feel bad for people who are too lazy to just look at free information, right? Quite the opposite. We want to be grateful for lazy people that are out there making poor choices, because what ends up happening is that creates an arbitrage. That is a life arbitrage, right? We don't have to be so smart. That's like, people think, oh my God, you have to be so smart. No, no, no. You don't have to be smarter. You just have to be less stupid. You just have to be less stupid. And there's a huge arbitrage in there. You don't have to be like this PhD super genius. No, 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 none of that. Just less stupid. It's actually much simpler. So we just want to be grateful. Truly. It's not about like, oh my God, feeling bad. Oh my God, we need to teach them and show them. They're never going to listen.
Oh, see, that's kind of how I feel.
No, they're never going to listen. So don't waste your time. Just worry about yourself and make your money and take care of your family. That's what's important.
All right. Wow. I was going to go that route and say, in Spencer Fantasyland, it would be nice for people to actually, wake up like Neo in the Matrix and have their eyes open to the reality.
Listen, the people in this chat today, the people watching this video, kudos to you. You guys know. You guys know. The people out there, they don't know, and they're not going to know, and they don't want to know. So don't waste your time. Worry about yourself. Take care of your family. Take care of your clients. Do what you got to do, and embrace the fact that there are humans out there making really poor choices. Right?
That being said, I'm sure there are many financial advisors around the country who are having to talk to their clients, talk them off the ledge now, because did you know that there's war in the Middle East, JC? And we're at all-time highs.
What is there not, out of curiosity?
And we're at all-time highs, and this is a great selling opportunity right now, and they're having to say, whoa, 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 slow down, pump the brakes here. This is probably why you're not an advisor yourself, because you probably couldn't. You would bash head into a wall if you had that conversation 500 times a day. But I'm sure it's happening out there, because people get scared at all-time highs for some reason. They do.
Listen, I've learned in my experience, I don't like the financial advisor stuff. I don't know anything about it. I have great financial advisors. They are great. Ritholtz Wealth Management. These guys are fantastic. Yeah. They help me with my retirement accounts, my kids' college funds, portfolio loans. They consult with me on real estate and mortgages and stuff like that. My financial advisors are so good. And I am so not good at any of those things. And I don't want to be, I like
speaking
with my financial advisor and learning things about personal finance. I really do enjoy that. I really do.
Stay in your lane.
I stay in my lane. Yeah. I go to them for stuff like that, and those financial advisors come to me for the technicals. Isn't that lovely?
That's right. The higher it rises, the harder it falls. So goes the conventional thinking, but that's not true. Okay. Let's state some markets.
All right, ladies and gentlemen, we got the Dow futures up 136 points. It's about 1/3%, 43,850. Yes, you heard it. 43,000 for the Dow, 850, almost 44,000. S&P 500 futures, after closing at a new all-time high, 62.11, up another 16 handles. That's 1/4% to the upside for S&Ps. We got the NASDAQ 100 futures leading the way this morning, up 1/3%, another 73 handles, 22,740 for the NASDAQ. Bonds up again, 30-year bonds up above 115. Crude oil up a smidge, 0.5%, 65.5. You got copper still above 505, down 1.4%. Gold down almost 2%, 32.85. Silver down 2%, 36 and change. With the VIX flirting with breaking 16, looking for a 15 handle today over in funny money land. You got Bitcoin flat this morning, just under 107. You got Ethereum, 24.42 for the ETH, up 1% on the day. You got Solana, 142, up 2% on the day. And that brings the total crypto market cap, Mr. Spencer Israel.
Yes, tell me.
3.23.
The VIX has not been this low since February. February 21st was the last time the VIX was this low. All right. JC, I know that you don't care why the market is up or down or sideways,
I
but
know why.
okay. Okay. Well, my question is going to be, it is the end of the quarter, right? On Monday, right? Monday is the last day of Q2,
Yep.
last day of the first half. Have you observed over the years anything regarding end of the quarter patterns, buying or selling, whatever the trend is for that current week or month? Is there anything to that, or because I'm thinking it is the end of the quarter, right? And
Are you talking like end of quarter shenanigans?
yeah.
You know what Spencer's referring to, perhaps some you may have heard it called window dressing.
I mean, yeah, but I've never seen it quantified in any way. So it's just one of those like old cliches that you just throw
Yeah.
out there. But I don't
You
know.
know, it happens for sure. I could tell you for a fact. I've been
Okay.
working with these hedge funds, managing my own hedge fund, pulled my own shenanigans back in the
Okay.
day.
Yeah.
You know, so I could tell you for sure. You know, it's not like one thing. There's all kinds of shenanigans taking place at the end of the quarter. You know, cutting out some of your losers so that you don't have to show that to your investors. You know, your LPs. You know, putting in new names so you can show the LPs what you're in.
Right.
You know, I mean, that's just the way the world works. Humans making poor choices for the wrong reasons. In a lot of these cases, you know, these hedge fund managers have different objectives than their limited partners, which is, you know, kind of wild. But that does happen. You know, I don't do anything about it.
Well, I guess my question was really, do you see things in the chart on a semi-consistent quarterly basis or not?
No,
No. Okay. All right.
not really. You know, it happens out there. The shenanigans take place, no question. You know, how do you take advantage of it? What's consistent about it? You know, I've had a hard time, you know, kind of seeing that. I don't necessarily know that there's anything consistently there other than, you know, just shenanigans around. You know, it's more of like an end of the year. If we're going to talk about the shenanigans is more end of the year tax loss harvesting. You know, there's better opportunities to take advantage of the shenanigans there versus the quarters, in my
Yeah.
experience.
Okay. That's
How's
fair.
that?
Yeah. Good answer. I just thought, all right. I really do hope that these all-time highs hold through Monday, because I like seeing, like, it's a nice clean narrative, isn't it? You know, Tuesday morning you wake up, markets at all-time highs, end of the quarter at all-time highs. It's very clean. I like a clean narrative.
Yeah,
So
I'm sure the market really cares about how
no, I
clean you
know,
like
I
things.
know. All
I'm
right.
sure it's really, really concerned about Spencer Israel's feelings.
Well,
Why don't we throw up slide 2? Speaking of humans making poor choices. You know,
this is
does
also a
Trump
clean
squeeze?
narrative. This is a clean narrative right here since the election. It's a nice clean. Well, the narrative is by Bitcoin, but
So, you know, like 2016, you had these folks telling you that Trump was going to be terrible for the stock market. Volatility is going to spike. These tariffs are going to be the end of the world. Oh my God. And you see it in the data. You see what the Republicans think about the market. You think about what Democrats, you see what Democrats think about the market. 90% of Democrats think that, you know, according to the latest polls, you know, which may or may not be true, but it's pretty accurate based on, you know, my observations. 90% of Democrat voters think the stock market's going to fall, which is fantastic. You know, we love angry liberals that are getting squeezed, right? Again, like what we were talking about before, taking advantage of humans making poor choices. That's the case in the market. When you add a layer of politics on top of that, whew, the choices are even worse, right? And you're seeing it. So, you know, just going over a few key returns here, I think is nice. Spencer Israel, you could feel free to tell me what stands out here. MicroStrategy up 70%, Bitcoin up 55, Israel up 35%. Shout out Israel. JP Morgan up 31%, Tesla up over 30%, Germany up almost 30%, Africa up 20%, China 17%, IFA, which is a lot of Europe and Japan, up 13%. The rest of the world outside the US up 12%. Financials up 11%, Nvidia 11%, Q's up 11%, Latin America 10%, tech 10%, Japan 9%, industrials 8, S&P 7, consumer discretionary 6. Everything is up. Everybody's making money. All you had to do was ignore the assholes that were telling you that who the president is going to make the stock market fall. They were lying to you. And
I do think
again,
of all the things on this chart that interest me, it's the spread between the ACWI X and the ACWI. So ACWI X, all world X US, up 12%. All world with US up 8.8%. Right, so about a 3.5% percentage point spread there. Outperformance if you get rid of the US. Right, that's interesting to me. But if you look at the ratio chart of those two, most of that outperformance, pretty much all of it, came in January, February, and early March, right? So that jumps out to me.
I mean, it's just so much winning, you know? It's just so much winning. Like an unbearable amount of winning taking place by investors who bought any of these things when Trump was elected. Like so much winning. How do you feel about that, Spencer?
I mean, there are things that are not winning, right? I mean, if I was heavily invested in the diamonds, which I don't think anybody is, but I'd be not happy right now to be up 3% since the election. That would be.
Are you talking about the Dow diamonds?
Yeah, well, it's on the chart, isn't it?
It is. It is.
Okay,
it is.
That wouldn't
include the most important index in the world.
That wouldn't please me. There are many things that are not on this chart that are not doing.
Well, the Dow Jones Industrial Average is basically up what it's up on average. So it's just average returns for the Dow since the election.
Okay. Yeah. Look, I mean,
everything else is above average, but the Dow's about average.
Look, there's a lot. There's a lot that's missing from this chart.
Of course, right? You can throw in Poland, right?
No, that's not what I mean.
No, it's not. Oh.
No.
Throw up slide 1. Speaking of, let's just focus in on what matters here. You know, we talk about how we're Americans and being American is awesome. Don't get me wrong. Love being an American. Throw that slide 1 up there, please, Spencer.
Make sure
being American is fantastic. But at the end of the day, whether you're American or European or Canadian, we are all Earthlings. So I just want to give a big shout out to Earth. Shout out Earth here. Earth making new all-time highs.
Yeah, the ACWI is probably would you call this like the go-to all world index? I would. This is
you got about 60%. You got about 60% US, 62%, something like that. That's probably about right. So when you talk about how this one has, a lot more exposure to the United States, I think that's probably pretty accurate. 60% America.
Yeah, I'd say so.
If you're an Earthling, for those of us who are Earthlings, I'm good with that. Right? I got another one. If you want to take out America, if you throw up the new slide 2 there, Spencer, you'll see the All Country World Index ex-US also pushing up against new all-time highs. So I just want to give a big shout out to Earthlings out there, anywhere you are in the world. Whether you're in the good old US of A, or whether you're in Argentina, or in Prague, or maybe in Greece, or in Hong Kong.
I think this summer you can summarize all this by saying, like usual, it is a good time to be an investor, which is usually true, right? So it's a good time to have money invested in risk assets. This is really no different than 3 out of every 4 years markets go up on average. So it's been a great first half of the year. I don't have a ton of notes, a ton of feedback, other than we had a little bit of a interesting spell there for a couple weeks in April, but we didn't retest those lows in anything really. So
yeah, remember when the market had to retest the lows? Remember how hilarious that was?
No, it didn't have to.
I was told that it had to.
No one said.
I was also told that I wasn't allowed to go on vacation with my family in April because we were in a bear market. God forbid JC spend some time with his family. God forbid.
I don't know what the percentage drawdown was on certain things, but it was not insignificant, right?
Well, let's just keep something in mind. It's a good lesson. Mind your own fucking business. Mind your own fucking business. Why are people so worried about where JC's going on vacation with his family? Why aren't you buying stocks? Mind your own fucking business. Don't worry about what JC's doing or where he is. Read the blog. I'll tell you where I am.
Because there's always a good reason to not want to buy stocks. In April, you were catching a falling knife. In May, you were waiting for the retest. In June, we're at all-time highs. You're buying the most expensive prices in history. Why not wait until it's on sale? There's always a good reason not to buy, right? So, the challenge is coming up with a reason to buy, right? Anyway,
for me, whenever I buy a stock, and this goes every single time, and this is really important for people to understand. If I ever buy a stock, I'm buying it for one reason, and it's because I think I could sell it at a higher price. That's it. It's the only reason. That's right. I don't really buy stocks for any other reason. I only buy stocks if I think I could sell it to somebody else at a higher price at some point in the future. That's it.
Nah, well, that might be reasons 1 and 2, but reason 3 is sometimes you buy them as a hedge against yourself, right?
No, I don't even know what that means.
Like Disney, for example, right? That your Disney position is like, I'm spending gobbles of money at Disney World. I might as well get paid, as a shareholder.
All right, you got me on that one. All right. You got me on that one.
Yeah. Sometimes we buy them as a hedge against our own behavior.
Also, like crypto, I have that because, we trade crypto and everything like that. But I've had a core position in crypto because, if this thing fucking goes and I don't own enough, I'm screwed. So there's also crypto and Disney. I got 3 kids, so I'm long Disney because if $12 hot dogs, bro. I spent $50 on balloons as we were leaving the goddamn park. So for me, if you can't beat them, join them. Is how I look at it.
Right? See, I've got the hot dog spread on in my portfolio because I own Disney and Costco. So I got the expensive hot dogs and the cheap hot dogs. So I'm getting both ends of the spectrum. But it's the same idea. The crypto point is that's just basic regret minimalization, right? What are you going to regret less? Owning it and not making money, or not owning it and it goes to a gajillion and you're not making any money, right? I mean, I would regret it personally if I didn't own it and it went to a bajillion. So that's just me. Let's bring on Kenny real fast, and then we'll do Crypto Fridays. We have Louie in the house as well, so we'll do Kenny, then Louie, then Larry. We got a race today. Let's keep it going. All right.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick in the house.
I love that old show from the 20s. The Kenny, Larry, and Looney. What was the Kenny, Larry, and something show? What'd you
Harry,
say?
Larry, and Louie.
Larry. Kenny, Larry. Hey, fellas, good to see you. We're going out with our greatest guys today. The Greta Garbo's on the show tonight. Welcome to the Kenny, Larry, and Looney show. Good to see you. What's up, everybody? The market never goes down. Have a great weekend. Take care, everybody.
All right, bye.
What's up?
He's gone.
Yeah.
If you ain't fading, you ain't trading. Are we fading this?
I'm actually short the Qs right now because I'm a glutton for punishment. But there's a reason to be short the Qs.
No, good. I'm glad to hear that I would have hoped you would be, actually.
Yeah, it won't last, and that's the joke. So every time we put a short on, we all gather around the campfire and we tell tall tales about when the market actually would go down. Way back when I was a kid, I saw the market stay down for 3 whole days. It was crazy. So it's just insane right now. It really is. It's beyond irrational exuberance. This is psychotic exuberance. But VWAP trade. I'm shorting the Qs. I came in with high hopes. I was just talking to my son about how to deal with disappointment. Yesterday, Nike earnings, right? The stock was actually chopping around. And I was like, ooh, please, for the love of God, would you not rip before tomorrow? And I wake up, I'm like, oh, man, it's already up 7 points. So I was looking forward to buying some Nike today because it doesn't matter. And I was like, actually doing a little test with my son. I was like, do you think Nike's the #1 sports company in the country? He's like, yeah, of course. I'm like, all right, cool, buying the stock tomorrow. Oh. That was it. That was all the bias I needed.
But there's not many to choose from, Kenny. So
I don't think they have the dominance from when we were kids,
No, they don't.
Jordan days. But I guess they are still the number one. You know, when you think sports apparel, you go Nike still, I guess, right?
No, these days On.
Right, that's what I was saying. There had to be another brand, right? There's so many more, competitors around. Did Under Armour make it? I forgot. I don't get out much.
No, they didn't. Nike has problems. I saw a great headline last night, and it was like Nike stock pops after showing sales decline, and like it was just a really great oxymoron of a headline, right? Stock popped, sales going down.
Right.
They've been having problems, Kenny. I wish Jeff Mackey were here, but he's on an Alaskan cruise, so we'll have to talk to him about this next week. But
Alaskan cruise, best way to see Alaska.
But yeah, I mean, it's in a huge drawdown, right? Nike is down what 60-something% from the all-time highs. So
right. Yeah,
they have issues.
Yeah, well, I'll tell you something. Listen, I came in really, really super bullish, looking to hopefully buy the stock under 65 today. It's already at 69. Now, let's talk about fading. Normally, when I come in, the stock's already gapped up. I look to short. I wouldn't play a short on this thing unless it's under 68 bucks. So, yesterday I forgot what we were talking about, but that trade worked. You know how you just have to wait for the setups to happen. So with MU, you got paid on the short. Very nice, right? And it was unique because the market turned and MU went the other way, which was kind of cool because, that's where you're bucking the trend. Normally, you don't see the chip stock bucking the entire industry, but that's what you saw yesterday. So we stayed short. And let me just tell you something right now. The number one trade right now, I think NVIDIA should start a service where you just mention your company's name in a conference call. And next thing you know, you got a 700% winner. You guys see CYN yesterday? Come on. CYN, $8 stock. You guys didn't know about this? This is the new trend. So either you want to be like MicroStrategy.
It was an $8 stock.
Yes. So they get mentioned with NVIDIA, just like NVTS, which was a $1 stock that went to 9. Here you got this one. And it all started with a little faux show, bro, in the morning. And this thing is on fire. So they lit the fuse and this thing just went completely batshit insane. And I didn't go near it on the short side, but damn, we caught 2 nice longs on it. And this morning, it's back, baby. And let me show you, before we go any further, let me show you the wonderful nature of what we do. And guys, I'm glad you guys are stopping into the midday show. Yesterday you saw the beautiful multi-day VWAP act as support. Let me show it to you again if I can get this going. Thinkorswim seems to add updates every morning. I just have a hard time loading it up. But you guys, did you know about this one? You didn't hear about this one yesterday?
No.
Yeah.
It's too small for me at 23 million market capitalization, but there's plenty of liquidity.
Oh my God. Yeah. And I think it traded the float, a couple of times yesterday.
That's always a good sign.
Yeah.
What could go wrong?
When the whole float turns over on a given day, that's great.
Not just once. So yeah, look at this. Look at this wonderful chart, right? Yeah, let me just look. Let's admire this for a second, right? So let me get off my screen. What is this? Notes. CYN, right? So all right, now that's funny. It's tanking right this second, but look at this. So here's the one from this is yesterday. So it all started very innocently with just a faux show, bro, over the 1 minute in the multi-day, whatever. But then you had this little move right here about 8:15. And this was after the news. So you had a real reason, technically, just to get back in with limited risk. Nobody thought this thing was going to 40. So when you're buying at 8:15 and 8:20 and you're going to $10, we're loving life. And we're pretty much done with the stock. And next thing you know, it just became a monster. But fast forward to today. Look at this action already in the morning. There it is. So when you get the prior day VWAP, and again, you'll have to take my word for it, ladies and gentlemen, the orange line was there, the blue line was there. These form at 4 o'clock in the morning when the data starts rolling in, the stock goes live. Prior day VWAP, access support, how much risk reward in your favor can you get? It's telling you, all right, there's the support. prior day VWAP holds, you buy it off the prior day VWAP. Now you've got limited risk. Look what the stock did. Again, I wasn't part of this, but $19.50 was your support. The stock rallied to $26. And this is what we do every day. So what we, when people say, you see it on all the Discord rooms and all the, on Twitter and all the social media, we were the first, we alerted our people. You don't have to be first. You don't even have to be second. You let the move happen, consolidation at VWAP, risk rewards back in your favor, and then you participate. Now look at this move. Look where you just came back to. So now if this thing holds this area where it held this morning, look what's happening. You're already finding the buyers at the same level.
Kenny, this is too fast for me. I can't keep up with what's happening.
It's not as when you start doing it every day, it actually becomes slow motion. But this is what I'm saying. You don't have to be first one in. That's the beauty of all of these names. When we pick a stock, like when Strazza introduced me to was it SRM, right? The news has been out for a couple of days, but this stock keeps finding, you're finding reasons to buy it. And again, yesterday you had to sell off on it, but you don't have to be first. You just have to know that there's a play going on and then wait for VWAP to give you that risk reward in your favor, and then wham, you're in.
So to summarize that, you don't have to be first. You just can't be last.
Yes.
So
let's look at Nike right here. So these are the lines that we were looking at the stock yesterday, and I was hoping to see them down here. So now we erase all that and we start fresh. Look at this beautiful clean chart. There's nothing on there. So now as it's rolling over, you want to be shorting the Nike, right? If you're playing this fade, and the most you're risking is the half and the top of the market. So anybody who's shorting Nike right now, go for it. Go for it. Because right now, this is it. If it's going to work, it's going to work right now. And the most you're risking is 68 cents. All right? Good luck. I'll see you guys and have a great weekend. And we'll be doing this again every day for the rest of our lives.
Love you, Kenny. Throw up, before we bring on Louis, throw up slide 1 there, please, if you will. So, for me, this has been on my radar of the, obviously they went too woke. Everybody knows.
I don't think that's the problem here, JC.
Don't be so sensitive, Spencer. So obviously we know they went too woke. They got punished. They wrote books about it. Charlie Gasparino wrote Go Woke, Go Broke, the whole thing. Fine. I really like buying those gone too woke companies because of at this, we talk about like the libs getting owned and, liberals getting squeezed and angry liberals and everything like that. And while that is true, this is not a political thing. We like to take advantage of the Republicans too. And the ones that, are just pissed off at Disney because they're too woke. Great. We're buying Disney. Pissed off at Nike because they're too woke. Great. Let's buy Nike if and when we have the opportunity. I think we might just have the opportunity. I think this is it. I think just like the libs have been getting owned in other areas, the Republicans are getting owned into Disney. And I think Nike is setting up for that type of squeeze. And if we're above 70, I'm happy to be long all day, Nike. Happy to be long all day. That's how I feel about that. You think that's right or no?
I'll be frank. I'm gonna kind of let Jeff Mackey tell me what to think about a company like Nike because Jeff is doing the chart. He's doing the chart, and he's doing the fundies, and he's doing the narrative, right? So it's coming at it from all points of view.
I just like that scoop and score. See, I like the scoop and score. Right, we get back below those highs from a decade ago. That was support around COVID and 2018.
Yeah,
we broke below that, and now we get the squeeze.
Look, I love me an obvious level or two, like an obvious in or an obvious out. I love it. So in this case, yes, on this chart you make it look rather obvious. So I'm just going off of your work here, but yeah, it seems pretty clear cut. You can buy it above that zone, you can short it below that zone. And that would be that. But I kind of want to hear what Jeff has to say about this.
Throw up slide 2. I know we mentioned Under Armour, just so you guys could see just how much of a disaster this thing has been. Absolute disaster. And by the way, it's not a political thing. JC, after ranting about politics every day for the last 5 months, not in favor of any political side or anything like that, but pointing out the opportunities because those who are too weak-minded to prevent their politics from getting in the way of their decision making in the market. And fortunately for us, there are many of those weak-minded individuals that presents opportunity. So we only talk about politics here when there's an opportunity to profit from the lunatics. And I don't know if you've seen the returns. There have been unbelievable opportunities to profit. By the way, China being one of those. Ranting about politics, China, these communists, and everybody knows they're communists, and everybody knows that Trump winning is going to be bad for China, which is why we've been buying China, because people can't think straight. So that's why we've been talking about politics. Just to clarify, sounds like some people here might be new here. Welcome.
Under Armour was the first stock I ever bought. When Liberation Day went down, this thing hit a 15-year low. Just brutal.
What a disaster. And I got one chart to introduce the Lou dog. Throw up slide 8, and then we'll bring in Louis. Slide 8 to me, this is a big one, guys. Nothing to do with politics, just an FYI. Really, maybe a little bit, I guess. Really just, this is total crypto market capitalization. You see that huge base from 2017 to COVID breaking out. We got to those 22 highs, really digested those gains, keep pressing up against those levels. Total crypto market cap starts making new highs here. I think that'd be really impressive. Really looking forward to hear what Louis has to say about this.
Let's find out.
Got my fingers on the pulse, avocado and toast, leather seats, jet plane, always ready to go.
Morning, guys. Kenny is over here trading these stocks that have got a $20 million market cap. I know that Phil was in the chat complaining, guys, that's still got a $20 million market cap. I feel like I've just been in the trenches just over the last weeks. I'm slinging meme coins over here with a $3 million market cap, selling doubles. It's crazy out there. You dive beneath the market cap ladder, and there's just so much hot garbage out there that's just popping. Solana's just been down. It's just been down over these last few weeks. But all of these just multi-million-dollar meme coins on the Solana network are just popping left, right, and center. So let's talk about that.
Louis, do you need to redefine the small, mid, large cap ranges for crypto? You know how we probably need to redefine what a large cap stock is these days because they've gotten so large. Maybe in crypto land, a large cap crypto is a few million, right?
I would say for me, a small cap is between 1 and 50 million.
50?
50?
Yeah.
In crypto.
And
I thought 50 was large.
If you're trading on, in the Wild West, if you're trading on the blockchain chain, 1 to 50 million for a small cap. I feel like that's a golden zone, right? Because again, we're here, we're just slinging these things, and we know that all of these are going to go to zero, right? But
I don't know, do we?
That 1 to 50 million range, I feel like is a really favorable range to play in because these things can obviously pop. A lot of them can just go to 100 million. Pull up the useless coin, right? Someone made this cryptocurrency literally called useless coin. This is a token that is useless. Everybody knows it. And look at the chart. It's just absolutely popped off. It broke above 30 million. It's now trading at $130 million market cap just in the space of a few days. So these are the types of moves. And I think we're moving into this market environment now where, like JC said, we've got the total crypto market cap breaking out. We've got Bitcoin just a stone's throw away from all-time highs. And you're getting a lot of the speculative end really taking off. You're getting crypto stocks, which are more highly leveraged to Bitcoin. They're beginning to outperform as well. And so we are just in this market environment where the speculative end, I think, is going to take off. We're moving towards the later stages of this bull run, which I think that's just, there's going to be a tremendous amount of opportunity within a lot of the garbage out there.
Can you throw up slide 1? I want to show you guys just how wrong I have been. Happy to be wrong in this, whatever. It was just, it was just a comment. It was just a thought. I did believe there was a high chance that we have seen the highs in Bitcoin dominance. And boy, was I wrong. Boy, was I wrong, Louis. We talked about it in New Orleans. We talked about it after that on the show. I've been thinking about it, and here we are, Bitcoin dominance making new highs. In other words, the percentage of total crypto that Bitcoin represents continues to make new highs. I thought there was a good chance that was done. Louis, is this just a blip? Is it actually done? Is this like a failed breakout, and now we get the turn, or is Bitcoin here to stay and there's no alt season?
I will eat my boot if this continues working higher.
What did you say?
I
Eat your boot?
I think that this has been a very unusual bull market in crypto, right? Where Bitcoin has obviously been outperforming because you've got a lot of the institutional flows that are driving this market. Where normally what would have happened is you would have had that rotation down the cap scale, but that really hasn't happened. A lot of the altcoins within that $100 million to $1 billion range have just been left for dead. And so there hasn't really been a whole lot of interest there. And so I think you begin to see that change. We obviously need to see a price confirm that, because Bitcoin dominance breaking out isn't conducive to that thesis. But I think even if you just look at the crypto stocks relative to Bitcoin, I think that tells the picture that I'm trying to show here, where I brought the chart. So if you want to pull it up, that might be a good idea.
Yeah, do it.
Where this black line represents crypto stocks versus Bitcoin itself. When this black line is going down, as it has been, when Spencer pulls up the chart.
Right, one second.
Yeah, throw it up, Louis.
There's a lot of charts. I ain't not as quick as Alfonso. Give me a minute.
Where is the Fonz? He's in Scotland.
Yeah, he's in like Glasgow.
Scotland? What is he doing in Scotland?
Not playing golf or drinking scotch. If I know Alfonso.
I gotta say, I've started playing golf as well. I have the body for it. I'm 6'3". I'm a skinny, lanky guy, and I gotta say, my game just over these last few weeks, man, it's improving.
You have a good skier body too. You doing any skiing these days?
I need to. You know, we've got some of the most beautiful slopes here in the world, just a few hours away.
And we're going to Park City in February, so get ready.
What's that? Sorry?
We're going to Park City, Utah in February.
Really? Are we? I made
the executive decision.
Yeah, yesterday, Louis.
Nice.
Don't worry.
Well, I had already made the decision. You guys are just finding out about it now.
Okay.
Lovely.
It is lovely. You know, are there better ski resorts than Park City? Yes, definitely. Aspen, Vail, definitely. Both of them much better. But they're a pain in the ass to get to. And the elevation is off the charts. So you know, we're going to go to Park City because it's so easy to get to. It's right next to the airport. So you fly in the airport, you're on the slopes in an hour, you know? So just to keep it simple. And it is great. Are there greater ski resorts? Yes. But this is great. Great enough. Great enough.
I feel like Strazza wasn't involved in that executive decision, because I don't think
definitely not. No,
I think he'll just be inside just drinking hot chocolate.
You know?
Yeah. Look, so when this black line is going down, it means crypto stocks are underperforming Bitcoin itself. When this black line is going up, as it has been over the last few months, it means that crypto stocks are outperforming Bitcoin. Now, why does this matter? It matters because these crypto stocks are more volatile and leveraged than Bitcoin itself. And so you're seeing that obviously with MicroStrategy, everybody knows. You're getting a lot of these failing companies that have just absolutely failed to deliver any shareholder value over their entire lifespan, and they're just buying Bitcoin in a last effort attempt to try and change that. And so again, is that something that happens towards the early or the mid stages towards the cycle? No, that's something that happens towards the later stages of the cycle. And I think that's going to be one of the hallmarks of this bull market, is you're getting a lot of these failing companies just buying Bitcoin. And even Coinbase coming out a few weeks ago saying that it's beginning to add some systemic risk, where they're not only buying quite a volatile asset and adding to their corporate treasury, but they're also doing that with debt. So this thing isn't sustainable. It's not going to last. I mean, go look at Circle, right? Go look at the valuation of that. I know JC is probably screaming inside mentally just hearing me say the word valuation. But you just have a look at a lot of these. What's happening within the
valuation when it comes to crypto stocks is rather hilarious.
And so you're looking at this scenario where you're seeing a lot of exuberance beginning to kick into these crypto equities. But you haven't really seen that in the altcoin space yet. So I think that's where it flows next.
Louis, give me which altcoin I'm buying.
Let's pull up Gary. I love Gary. It's a $3 million market cap if you want to dive that low. I mean, look at this chart, man. I mean, I was selling doubles on this yesterday. Nice breakout. Let's pull up the Gary memes, right? I mean, thank you, Gary. Thank you, Gary, for delivering some fruit salad. Thank you, Gary. You know, he wants to make sure that you got some vitamin C.
Can you explain?
So-
I don't know what you're talking about. Can you explain? Can you give me a little bit of context here?
It's just a
He's-
creator. It's just a creator token, right?
He's just a nice cat that brings you fruit salad and orange juice. So
You gotta trade it on the radio.
I think we should just all just say thank you to Gary right now. So
Thank you,
look at this
Gary.
chart. Thank you,
Thank
Gary.
you, Gary.
Thank you, Gary. I guess.
Thank you, Gary. Louis, give us a key level to watch on the old BTC. You know, for me, the anchored VWAP there, right around 106, is a big one. If we're above that anchored VWAP from 106, hard to be too bearish. What if we fail there again?
Look, I think that even if we have a little bit of messiness here in the short term, I don't really think that's the thing to pay attention to. What you need to pay attention to is the fact that we're a stone's throw away from all-time highs, but yet you have a look at what's happening in the futures market. And I want you to pull up the funding rate chart because that's the chart that you need to be watching. Where funding rate is calculated by taking the difference in price between, so this is liquidations, pull up the funding rate. So this is the difference between spot prices and the prices of perpetual futures. It's a really good gauge to understand the exuberance, the fear, and the greed of retail traders in the perpetual markets. When this line is really high and it's a big green line, that indicates a excessive amount of optimism and greed that generally happens towards market tops. And then negative funding rates generally happens when you get a massive liquidations and people are more position bearish or people on the long side were just taken out. It's really exceedingly rare, and I want to make that a big point. It's very, very rare to have negative funding just as stones throw away from all-time highs. You had that in combination with the chart that Spencer also threw up with the liquidations, where last weekend we had this down move. There was a massive amount of long liquidations in ETH, so everybody was positioned really optimistically. They were thinking that ETH was going to continue mooning, and they got way too cute. We had this nice little flush, a massive amount of liquidations, and now we're beginning to rally back up again. So I think, again, that just points to a sign where the retail positioning within the perpetual futures market tilts more bearish, and I think that's tremendously bullish, the fact that we're just a stone's throw away from the top of this.
Wow. Tremendously bullish.
Okay.
But hold on. Go back to the Bitcoin, Louis. Walk us through before you hop. Walk us through go to the funding rates.
Oh.
Go to the Bitcoin funding rates. So can you explain the difference between the perpetual futures with the
It's
spot
actually-
prices?
Yeah, sure. So it's
Like, why
actually
does
really
one represent the other, you know?
Yeah. So perpetual futures basically represent more speculative activity because these are futures contracts that don't expire. So there's deeper liquidity there. You can get more leverage there. So this is where you get more of the junkier retail traders. They participate in the perpetual markets, whereas the spot markets are generally for more stable, longer term investors, particularly when you're involved in Bitcoin and ETH. If you're a really speculative retail trader, you're not slinging spot, you're slinging perpetual futures. And so it's a really good gauge to understand what's happening within the retail market. And it's really exciting as well because, again, this longer term bullish case for crypto, you're getting a lot of the opening up of regulation, and perpetual futures have been one vehicle that US investors haven't had access to, but Coinbase is going to be changing that in the coming months, where they're going to be adding perpetual futures and giving them access to American customers. So that'll be quite exciting to see.
Shout out Coinbase.
Shout out Coinbase. Oh, and Dawson in the chat, even just front running me there. Thoughts on the Coinbase new perps? I think that's tremendously bullish. And again, they also acquired Deribit, which is the largest options exchange in crypto. So again, I think the market is really opening up really nicely for people in America.
Louis Sykes, ladies and gentlemen. Louis Sykes.
Cheers,
The
fellas.
man, the myth, the legend. Little facial hair. I see what you did there, Lou. See what you did there.
Slowly coming along.
It's looking good, Louis. Looking good.
That's one day I hope to get something like you, Spencer.
Okay. Well, my only advice that I learned a long time ago is to maintain the thickness, you have to hand trim it. You can't use an electric. You have to just do it.
Wow. All right.
I don't do that anymore, for the record. But I would go to someone and she would trim it by hand, and that's how it got so.
Oh, who's fancy?
So luscious. But that's my tip for you. All right. See you, Louis.
Adios, Louis.
Thanks, guys.
All right.
The chat is on fire today. Clearly,
I
I struck a nerve there. Man, a lot of people have lots of opinions about ski resorts. JC, you don't know what you're talking about with ski resorts. Stick to stocks. Wow. Wow.
I would love to comment. I would love to have an opinion on this, but I've never skied out west before, so I can't.
Well,
listen, I can't have an opinion. I want one.
Understand what our objectives are. If it was just me and my wife or me and the homies, right? We're probably going to Aspen or we're probably going to Vail, right? And it's not to be bougie in Vail, even though they got that there. It's at the back bowls in the back of Vail, past the China Bowl, is like my favorite place in the whole world. It's like a giant playground of skiing. I love it. Utah arguably has the best skiing, and we could go to Deer Valley. We could do all that stuff, but we got snowboarders and we got skiers, and we're getting together for investing, right? We're talking about trading. We're talking about investing. This is not a ski trip. It just happens to be at a ski resort. So we want to make it easy. We want to make it convenient. We don't need to make it so expensive like Aspen. We don't have to make it a pain in the neck to get to. So there are reasons why we are choosing Park City. Just an FYI, it's not because I think it's the greatest place ever. It's great, and it's great enough for our purposes, right? That's the reason that we chose that. So I was also thinking Whistler. Whistler's great, but kind of a pain in the neck to get to, and a different country.
I know that much. It's a pain in the ass.
Telluride might be the best ski resort in the country, or at least in the conversation. But man, you want to talk about a pain in the ass to get to, right? So that's not what we're trying to do. Why not Breck? I'll tell you why not Breck. We thought that Breck was a good idea in 2019, and we did it in Breck, and they were dropping like flies. Pajama trading. There were these like flatlanders. They were dropping like flies. Like half the people there just couldn't deal. So that's why not Breck. We thought that was a good idea, and we were wrong. So that's why I hope that helps clarify that I'm not like brain dead when it comes to ski resorts. I've been to a lot of them. I have my opinions. I have my favorites, and the reason we're choosing Park City is because it's so easy. That's why.
Shout out Vail Resorts. I'm looking at the chart of MTN. Doesn't look all that bad, actually. But anyway, let's bring on today's feature guest. Let's bring on Larry Thompson. I know he sent us charts, which I appreciate. They're right here in the deck. Let's see what he sent us. What do we got here? S&P. Okay, some sectors. Relative charts. Okay, TLT. Good. IWM. All right, good. Let's go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Larry the Legend.
Yo.
What's the deal? Look at you with your bull market shirt.
I know. You guys are over here talking about skiing, and I'm ready to go to the beach. What's up with that?
Because you got it. You don't have kids yet, but when you do, you have to plan ahead. Right? You can't just be like, "Oh, what do you want to do this weekend, babe? You want to go skiing? Sure."
Yeah, I'll be skiing.
I used to live 3 hours from Lake Tahoe. Speaking of amazing skiing and a pain in the ass to get to, we're not going to Lake Tahoe, but I used to be able to drive there, and it was fantastic. And we could just wake up and be like, "What do you want to do this weekend? You want to go to Tahoe?" Yeah. Don't work that way anymore, Larry.
Yeah, I'll be water skiing this weekend, so
nice.
that'll be fun. So,
dude, I can't water ski for shit, but I'm buying a boat and to go water skiing. My kids are only 2 and 4, so like,
JC,
they
JC,
can't
don't you
Get
know
a
the
pontoon, brother.
don't you know the first rule of owning a boat is to not buy a boat, is to have a friend that has a boat?
I know, but I'm not going to get like anything special. I'm going to get like a,
Yeah.
18, 20 footer just to like a toy to play around with. I know it's a waste of money. BOAT, break out another 1,000. Yes, I know. I'm fully aware.
Oh.
It's a waste of money. It's
Have
terrible.
fun. Have fun.
I know. It's not like it's going to be
Alright.
like a surprise. I know, but I'm not going all fancy or anything like that. I'm just getting something to play around with in the lake.
All right.
No big deal.
All right, Larry. What are we looking at here?
What we're looking at here is reflection time. So, fun fact, it was 2019, 2020, the COVID V bottom that I kind of got interested in the markets because I lost a shit ton of money. Shit ton being, 24 at the time. A lot of money to me. And I posted something this morning, just this chart. I think there's moments in the market that kind of define how you view markets. And for me, this V bottom was a moment for me that defined how I viewed markets, because last V bottom, I panicked. This V bottom, I posted this chart right at the time it happened. It was like probably a good time to add some exposure here. And I just think that's the power of taking time to learn technical analysis, understanding what JC talks about when he talks about the emotion and people panicking. Yes, he repeats it a lot. Yes, it might seem like he's interested in the politics, but he's interested in the emotion that politics elicits in people and how to take advantage of that. And that's what this chart highlights, right? It just highlights overbought or oversold in a long-term uptrend, people panicking out their minds, and clean risk reward to swing the bat against. That's what Nike is. That's what Disney was. That's what Tesla was. And that's what the actual S&P 500 was. But if you were busy worrying about everything else going on instead of price and people's emotions, you missed the boat.
Good.
Exactly. Yeah, exactly. But that's what this was just like a reflection of mine this morning. It was like, man, 5 years ago, I had no idea what the market was going to do. And, grinded, got the CMT, started posting my work, started learning. And this time we were prepared for it. So it's cool. You can take ownership for that part of your life. And so just wanted to start with that, just to give like a reflectionary note of the market, kind of where we've come from. But we can move on.
But Larry, but new
things.
new all-time highs means the market is expensive, right? That means we got to be sellers, doesn't it?
Yeah. If only that's how it worked, right? I think we made. How did last year go when we made 40 new highs? Pretty good year.
Excellent year. Excellent.
Yeah. So speaking of new highs, right? Doing some reverse engineering yesterday, and I've been working on this for a little bit of time, is where are new highs potentially going to come from in the market and what's already at new time highs, right? So all I'm doing here is taking the 11 sectors of the S&P 500, right? And so the percent from new highs and then the weighting of the S&P 500. And there's four things you can do here. But the two big things I want to point out is that look what's leading. Communication services, industrials, tech, financials. I can't think of better leadership in the market. I literally could not think of better leadership. If you said, Larry, craft a bull market, what you want making all-time highs, I would say technology, industrials, financials, communication services is just bonus on top, right? And so seeing that take place in the market has no reason for me to be worried about where the market is headed, especially with industrials doing what they're doing. And then that column all the way to the right, you take the S&P 500 weightings. This represents the 6 sectors that are within 5% represent 75% of the S&P 500. The rest of it represents 25%. So the smallest and least important areas of the market are the ones not yet at all-time highs, right? So I think if you look on the surface at the market and you see an all-time high, you're like, the market's expensive. But when you do the actual analysis underneath the surface, this is exactly what you want to see. This is what's in these CMT textbooks. When the market's breaking out like this, probably has room to run. That's all this is highlighting.
Spencer, can you throw up slide 13 there? And then we'll come back to Larry. So this shows the communication services, 0% from new highs. There's a good reason why it's 0% from new highs, because it is at a new high.
Yeah.
And so you're looking at 16% Meta, 15% Google here, Netflix at 7%. Shout out to Walt Disney, Take Two down there as well in the top 5. So to be clear, Meta and Google, not technology stocks, featured holdings here in the communications index. New all-time highs. Look at that polarity, Larry. Look at that former resistance turning into support. You learn that in the second day of technical analysis kindergarten. They teach you that. And here it is, real time.
Yeah. And I bet if you threw, not that it matters, but you threw something long-term, 200-week moving average, probably lined up really well with that.
200-week moving average. It's a lot of weeks.
It's a lot of
4
weeks.
years?
4-year cycle. 4-year cycle. Yeah.
It's a lot of weeks.
For sure.
Too many weeks for me. This coming from the guy looking at incomplete quarterly candles. So
I was going to say,
Yeah.
Right.
So,
right.
Larry, do you get down with the quarterlies? You partake?
No,
not at all. No quarterlies.
No quarterlies. I think, I think for my time frame, there's a lot that can happen within that. And so from an execution standpoint, probably informational, right? But I don't look at them too much. Monthly is about as far out as I go.
Yeah, I used to be like that. I everything you're saying, I used to say that too. And I kind of changed my tune. You know who got me to change my tune? David Cox. David Cox. Shout out Canada. Canadian. He'll be with us in make sure that David gets the invite there, Spencer, please, because he's in Toronto. David was the one like, GC, how are you not looking at quarterlies? And just talking to him, like, this was a few years ago. I'm like, David, you're right. I'm gonna go do some quarterlies, and I've been doing it ever since. Like, listen, it's 4 times a year. It's not like I'm looking at quarterly candles for everything. It's like a dozen or 2 dozen ticker symbols that are the most important assets in the world. You go through the quarterlies. It's actually like helpful for data sets that go back forever, like S&P 500 or Qs or JP Morgan. Like when you're going back 4 or 5 decades, the quarterlies actually do add value. Maybe one day, Larry, you will change your tune. If not, that's okay too, right?
Maybe one day.
Maybe.
So.
All right, let's do a couple more from Larry.
Hold on, I want to hear about bonds.
Oh, okay.
Yeah,
ratio.
Go to bonds.
Do that ratio, and then we'll go to bonds.
Yeah, so all I'm highlighting here is, once again, we see new highs, right? Then what are we looking for underneath the surface to maybe confirm them? Or is it risk on? Is it risk off? Is defensive leading? Is there breadth divergences? Is there momentum divergences? You're trying to do a sniff test, a lie detector test. What do we see here? High beta versus low vol, making new highs, right? And this is a ratio that was struggling. This is a ratio that actually kind of gave us warning of the pullback that was to come earlier this year. And now it's making new all-time highs. So it's just, the data is pretty overwhelmingly bullish at the moment, which some people will be like, that's when the market tops, or all the technicians are bullish at the top. Yeah, because if you're following price, you're bullish at the top, right? And then we manage risk on the way down. So I don't see the need to panic in advance. It's like not going out, not buying a boat because you're going to die when you're 90. It's like, yeah, you're going to die. The market's eventually going to go down, but enjoy the ride, right? Enjoy the time in between. So that's all I had here. I mean, so many charts look bullish. I think, Spencer, you can pivot to bonds. And then also I want to talk home builders, because I think it's the same setup. So,
yes, Larry. It's almost like were you in our meeting yesterday?
I was not. No.
You should start coming to that meeting.
Yeah, agreed.
Dude, we were talking about exactly this. We're talking about homies, and then Strazza's like, dude, you could buy calls on TLT. And me and Sam were like, we did last week.
Did it. Yeah, exactly. Did it. But the thing I want to highlight here is, I think there's 3 stories in the market right now. If you like rip through a lot of charts, which I know the team does. 1, international led the way, right? 2, new highs are continuing to make new highs. You have strength. And then 3, this is the piece that I had some concerns, right? Didn't get out of the market. My concern was home builders, right? Which is a derivative of rates, right? Which bonds are derivative of rates. But what we've seen is, I don't think we need home builders to do a huge catch-up trade. I just think we need them to stop going down. Same thing with rates. I just think rates keep being messy. Keep trading sideways, keep failing to break down. And just, if it's sloppy and messy, businesses can deal with that. I think people are overhyping the interest rate story when honestly, interest rates have gone sideways for 3-4 years at this point. And it's just something that people like to extrapolate the data. But I liked this catch-up trade here. I liked the failed breakdown. I liked the RSI divergence. And you had clean risk reward, which same setup in home builders. And the beauty, which is what Steve is mentioning, the beauty of looking at bonds is trading them via options, right? Is because when you trade bonds via options, the IV on them is like 10%. So if you get a 1% move in a day, right, in bonds, you can double in a day, right? And that's the kind of, and then you have such clean risk reward. So I like the catch-up trade here in home builders and home construction if the market continues to go out to new highs, because I didn't bring the chart, but if you look at the S&P 500 and you look at semis, right, they tend to trade together with home builders. And I think the dispersion here is not one where the market catches down to home builders. I think it's one where home builders start to build out and catch up. It's very interesting, though, because industrials are making new highs and home construction and home builders are still sitting down here, which
right.
I think a lot of people, this is what I've really learned. When there's always bearish data points, right? But if you if you really take the weight of the evidence, you have to understand the market is made to go up, and especially the momentum-based capital-weighted, like they will take time to allow something that normally goes up with the market can go down. And if you focus on that too much, you tend to be wrong, because there's always this, oh, well, this isn't going up yet. And people are like, I'm not in the market because this one thing isn't going up yet, where it looks like it might actually start going up. It looks like, I don't know why this one piece of data would drag the rest of the market down. Like, I think the rest of industrial companies would let us know in advance. I think bonds would let us know in advance. I think the S&P would let us know in advance. I think credit spreads would let us know in advance. So to me, I see this as an opportunity because you have the leaders leading and you have the things that were breaking down starting to rebound. That's bull market stuff right there.
Markets
Which one though, Larry? Lennar, Palti.
Honestly, I love this. I love these. I love actually playing it via the ETFs. It's hard to get it. I know it's hard to get options, but if you want some juice, look at Nail, NAIL. Nail is a 3x leverage home builder ETF. It's up 9% this week. I don't like the setups of the individual names as much. I don't think they look as clean as the ETFs, just to be frank. So I've been playing it via Nail. And then I think I have some long dated options in XHB. But the individual names like DHI, I think looks the best, right? I think DH Orton looks the best, but it's still sitting below this 130 level. And I don't like it as much as I like the ETFs overall. I know it's boring, but that's the truth.
A man after my own heart, Larry, with the ETF.
Yeah. No, it's not junky enough for me, Larry.
Nail, you don't like the 3X ETF?
I'm not a day trader, so I don't trade the triples.
Yeah, I mean, you can hold them for.
What's the difference between a triple ETF and options, brother?
The option will expire. And
the option will expire. Yes, that is accurate. The triple ETF resets every single day. It's designed for a daily triple, not a weekly or a monthly triple.
Yeah.
So every single day it starts over again.
That being said,
so just because the underlying is up 10% doesn't mean the triple is going to be up 30. In fact, it could even be down depending on the volatility.
The leverage stuff will work.
Can I finish answering the question?
Sorry, go ahead.
And then in the options, it all depends on which options you have. If you own out of the money options, you're going to get that DK every day. If you have a Delta 1 in your options, then it's a synthetic long and you don't have that scenario. I don't know. There's a lot of differences.
Well, yes. I just meant from a juice perspective, junk perspective.
In the options market, you manipulate the risk versus reward profile to give you the juice to meet your own objectives. These triples are not designed to hold for more than one day.
Fair.
You know, I mean, I don't know. It's just not for me. I know people like to hold these things for more than a day. Like that doesn't make any sense to me. Like you're losing. You're already losing. I don't know. It's not for me.
Larry, are you going live this afternoon?
I am.
Okay.
At 5 p.m. Go over some of these charts, and I'll actually be sharing a lot more of the actual individual ETFs, because I think ETFs a lot of times are clean to play a lot of this stuff, because a lot of the ETFs have that mix of leadership and the ones that are rotating higher. And I like the risk reward, like home builders, for example. I think they look good. I think you get a lot of ways to add exposure outside of, the S&P 500. So yeah, I'll be breaking down a lot of the ETFs and which names I think will be next to make new highs.
All right, 5 o'clock today, right here on the channel, YouTube, stockmarkettv.com, weekly chart review with Larry Thompson.
Larry, great shirt, brother, man. Well done, sir.
Bull market shirt.
It is a bull market shirt. We need to have our own bull market shirt, so we stop rocking like other brands as bull market shirts, right?
There you go. This is Canadian. Shout out Canada.
Shout out Canada. So many Canada shout outs this week. Shout out Canada.
Yeah.
Good evening, Toronto.
Let's do a quick recess and get out of here.
Let's do it. Go ahead, Larry, as our guest.
All right. So I want you guys to do your own due diligence on good old MSG. And I'm not talking the stock. I'm not talking the stadium, but monosodium glutamate. Underrated, underappreciated ingredient in your cooking. Use more MSG. Stop being afraid of it because it's in processed food. The narrative around Chinese food is propaganda sold to you by some racist. Add some MSG to your food. Thank me later.
Wow. That's a hot take right there, Larry.
It's a safe tip. Do some research.
I don't know anything about MSG. MSG?
The only thing I know about MSG,
all I know about MSG is that the Knicks can't win shit in there.
It's a flavor enhancer. It helps flavor your food. Just use it.
If you've ever wondered why, like, you never feel full from Chinese food, like your appetite is a bottomless pit, I think it's the MSG because
how come pregnant women aren't supposed to have the MSG?
I don't know.
Spencer, you're the expert now.
No. That I don't know.
That I don't know.
Yeah,
but I will tell you this.
Yeah.
Do you want to know that MSG is a natural derivative? Do you know what it's found in? Parmesan cheese, seaweed,
really?
Tomatoes. Yes, it's a natural. So if you're eating a bunch of Parmesan cheese at your Italian restaurant, you're probably getting more MSG than you are at your Chinese restaurant. You're just racist.
Wow. Jesus.
No, but yeah, when someone comes by and they're like, do you want cheese? They're saying, do you want MSG? Because Parmesan cheese is very high in MSG.
Good to know.
Wow. Hot take.
That's what I'm saying.
Larry.
Do some research this weekend. Buy yourself a little thing of MSG. Add it to a chicken marinade.
And where does one buy MSG? Like at the local
Amazon.
bodega?
It's on Amazon. Yeah, you can just
Amazon.
anywhere.
Yeah, true.
Yeah.
People don't go to bodegas anymore.
Do some research though, right? I'm just telling you to do the research, and it's a great ingredient.
You're saying it got an unfair rap a few years ago when this whole campaign against this anti-MSG campaign from like whatever.
It was like
bunch of racist bastards.
Yeah. Okay.
Yeah, it was the I mean, you can literally just look up this information. It was the 1960s. But yeah, MS. And the problem is people put it in processed foods. So then you have association bias where you're like, oh, because it's in processed food, it's bad. There's also water in processed food. Just an FYI, you didn't know.
Nice.
Dude,
Larry, so many hot takes today.
Processed food. So
I'll let Spencer close us out. I just want to quickly give a shout out to the state of New Jersey. The great state of New Jersey. Like MSG, getting a bad rap. New state of New Jersey, one of the greatest states in this here US of A. I don't live in the state of New Jersey. I lived in Hoboken for a couple of years, 20 years ago. So I don't have a horse in the race. I don't give a shit whether New Jersey sucks or is awesome. I am here to tell you that the majority of New Jersey is a wonderful place. Shout out to Avalon. Avalon, better than Stone Harbor. Sorry, not sorry. Avalon. I'm leaving today. Actually, I'm the last one here at the beach house. We were here all month. It's fantastic. Shout out Avalon.
Nice. Just like MSG, the only folks that hate New Jersey are racists. So you should just not hate on New Jersey. My Recess is just a shout out to scented doggy bags. I don't have a dog, but I got a nice tip from a buddy of mine. For whatever reason, when you slap the word baby on a product, there's a baby premium to that thing. So he's like, don't buy any like scented baby diaper bags. Buy the doggy bags. They're for dogs. And you can use them to put the dirty diapers in them, and it's just a bag. A bag is a bag is a bag. And shout out to my friend Brian because that was a great tip. Scented doggy bags for the win. My house does not smell like poop because of those. So
nice.
What about your fingers? How are they smelling these days?
No, they're smelling okay. They're okay. Yeah. So
Don't do that on camera.
Wait till your kid starts eating real food. Woo!
I know. Well, right now we're just on a liquid diet, so you know.
Wait till they start throwing the poop at you.
All right. We
fellas.
are out for the rest of the day, with the exception of Larry. Larry will be live, like I said, at
5 p.m.
5 o'clock Eastern time, right here on the channel. We'll be back on Monday with Andrew Adams as our guest.
Nice.
On Monday's show.
Nice.
We'll see you guys there. Thank you for watching. Enjoy your weekend. Go make some money. And YOLO responsibly.
Have a good weekend. Adios.
Hey, guys.
Adios.
I can't take no loss. I don't even know what it costs.